Okay, so we can get started and see what the market got or whatever we have here. So um, we're gonna start with the sentimental analysis part. And remember we mostly use my FX book. So we're gonna use my FX book. For the sentimental analysis part. So on my FX book, you go to where we have community and then you drop down there where we have sentiment. Go to where we have sentiment, and then right there you now drop down. You are going now to start seeing this later. So you are going to see now the currency pairs there and everything. So you can see the first currency there is Euro USD. And what's there is that most of the traders are on longs, which is 62%, while shorts are 32%. So what this normally means, or what we normally do, is that the minority, this is now where the smart money and the banks are. See on your screen, please. Labda check on your side. My screen is okay. Anybody else who is not seeing my screen? My screen is okay, so check on your side. Somebody else confirm you can see my screen. Check your network kindly. So I was saying that where we have the minority, in this case where we have the 38%, this is where the banks are, where the smart money guys are, and the other institutions, the big boys. But now, here, the longs, this is now where retailers are. So most of the retailers are on longs. And in most cases, and as I have been telling you, we have to align ourselves with what? With the minority, which is now in this case the smart money guys. So for Euro USD this week, we will be looking for um, selling opportunities. That is sentimentally, right? Now let's come to GBP USD. Let's go to GBP USD. GBP USD, you can see now 45% of traders are on sales while 55 are on longs. So in this case, we will as well be looking for selling opportunities on what? GBP USD. We will be looking for sales on GBP USD. Then for the other currencies, you can check them during your own time. The currencies you like, you can say like this one is GBP JPY. The shorts are 16% while longs are 32%. That means you can look for longs on GBP JPY. That is as I've just said, that is sentimentally. You have USD card here. You can see USD card. For USD card, you can see shorts are 69% while longs are 31%. So it's highly advisable for you to do what? To look for the longs, right? We will check on technicals and see. So let's go down and check on gold, and then we can proceed to the fundamental analysis part. Then we conclude with technicals. So let's see XAUUSD. XAUUSD. Yeah, it's gold, and very nice. For gold, you can see 64% of retailers are on buys, while 36% now, as I've just told you, that this is where we have the big boys, where the banks are, the institutions are, the hedge funds, where they are, is what? Is 36%? Is 36%. So if you need to check on any other pair, just check on it. I've said this is my FX book. You go to where we have a community, and then you drop down, you're going to see sentiments, and this data can be displayed to you. Now We are done with checking on that. We are done on checking on the sentimental analysis part. Let's go to fundamental analysis or the economic calendar. And in this case, we are going to use Forex Factory. We are going to use Forex Factory. So Forex Factory is what we're gonna use. We are going to use Forex Factory. And you can see here, 3 hours ago, Iran to halt attacks as long as US maintains latest pause. Senior Iran source tells, right? So if you don't understand what this news means, you can just come here, you can just copy the news, you can just copy the news, Control C. You can just copy the news, then go to your chat GPT, go to your chat GPT, Control V, paste that one, and just have a simple question. What does this mean for gold? And let me add DXY. So let's see what simple explanation we are going to get from ChatGPT. So just make good use of the ChatGPT. So here it is. Just think. Impact on gold. XAUUSD. Initial bias. Bearish. Gold is a safe haven asset. When geopolitics tension is, investors reduce demand for safe haven assets such as gold, Bitcoin, and the rest. Now, risk appetite improves, leading flows into equities and other risk assets. Geopolitical risks premium in gold begins to unwind. So, I believe you have now understood what it means. That means gold will be bearish, right? Now, impact on the US dollar or the DXY. Doing what? Bullish. Reduced geopolitical uncertainty can support broader market confidence. The dollar may retain strength if investors continue favoring US assets, stocks being included. So, if the guys now are shifting from gold as a safe haven, where are they diversifying their investment? One is the dollar index, right? Yeah. Then you can see again we have the one for oil, oil connection. Let's check on oil. We have oil there as well. Okay, now on oil, what is the impact? Lower probability of supply distractions, reduced concerns about the Strait of Hormuz. Oil prices could decline. So if oil prices are declining, that means it's gonna be bearish. So I was just showing you how you can easily interpret this news. If you don't know how to interpret news, you just copy it, go paste it in your chat GPT and ask it what will be the impact or what might be the impact to the market. And you have seen that it has explained to us very well. So let's check on the economic calendar. Let's check on the economic calendar. So once you go to your to my Forex, once you go to Forex Factory, you have forums, trades, news, and calendar. So you click on calendar. You click on calendar so that you can access the entire economic calendar for the week. So tomorrow being on Monday, I don't see any major news tomorrow. There is no major news tomorrow. Major news are the ones with this red flag. If you see any news with a red flag, that one is a major news. So tomorrow there is no any major news. But make sure you check on these durable goods. The core durable good orders and durable goods orders, the month over month, that is in the US, and that will be at 3:30 p.m. Just make sure you check on them. Now let's proceed. Let's go to Tuesday. Let's go to Tuesday. So on Tuesday, at 6:05 a.m. At 6:05 a.m. we are going to have RBA governor speak. So who is this? This is the president to the Bank of Australia. The Central Bank of Austria President Bullock will be giving a speech at 6:05 a.m. on Tuesday. So if you trade Audi related pairs, make sure you are keen, because you know when these guys are speaking, like in the US when Kevin Wash is speaking, where initially we had Powell, these guys have great impact into the market, because they might be talking about something concerning interest rates in the future, right? So that is the first one on Tuesday. Again, on Tuesday, I don't see any other major news, though we have to check on this ADP weekly employment change. ADP weekly employment change. So the other data is not there yet. I believe it will be posted by Tuesday morning, so we will check on it. Again, if you don't know what is this ADP weekly employment change, just come and copy, then go to your chat GPT and paste it there. Just go and paste it there. Control V. It's going to explain it to you. It's going to explain it to you very well. So here it is. Here it is. The ADP employment change, often called the ADP National Employment Report, measures the estimated monthly change in US private sector employment. So you can see it's talking about what? Employment in the private what? In the private sector. It is released by ADP in collaboration with the Stanford Digital Economy Lab and Services as leading indicator ahead of official what? Official NFP. So these are the leading indicators to NFP. These are news which are released like 3 days or even 4 days, it will depend, before NFP. Why it matters? The report provides insight into the strength of the US labor market. Higher than expected employment growth suggests a strong economy. So actual greater than forecast is equals to a bullish dollar index. And if the dollar index is bullish, what will happen to gold? Gold will be selling. So when it comes to employment data, and I've been telling you, when it comes to anything to deal with employment, unemployment is still there. So when it comes to something to deal with employment data, you have to focus on what? Actual and forecast, or the consensus. It will depend with the site we are using. For us, remember we are using a Forex factory. So if actual is greater than forecast, if actual is greater than forecast, actual greater than forecast, that is good news for the dollar, because it is signifying growth. Okay, so let's continue. So we will check on the other data there after it's been posted. You can see we don't have the forecast. What we have is the previous, which was at 16.5k. Alright, so let's continue. So on Tuesday, I don't see any major news. So Monday and Tuesday are very cool. Let's go to Wednesday. On Wednesday at 4:30 a.m. On Wednesday at 4:30 a.m. You can see we have CPI on Austria, that is month over month. Previous was at negative 0.7. They are expecting it to go up to 0.2%. So you can, I told you, just make everything simple if you don't understand fundamentals. And it's not a must for you to trade fundamentals, but you can be interpreting them. So just come and copy everything. Copy everything, go to your chat GPT and paste there. It's going to do the work for you. But don't become such a lazy trader. So let's see what is it. So you can see the whole, everything is being explained here. Everything is here. So CPI month over month, actual is pending, forecast is 0.2, previous was 0.7, right? Since actual figure has not yet been released, here is how to interpret the possible outcomes. Right? Here is how to interpret scenario 1. Actual less than forecast. That is now actual being less than 0.2. Bullish USD, bearish gold. But in this case, we are not dealing with the USD, so it should be now bullish what? Bullish Australian dollar. It's a bullish what? Australian dollar, bullish Australian dollar. So AUD is something like AUD USD. You know what to do on that. If the Australian dollar is strong than the dollar index, what are we gonna do? We are going up. So these are just how simple you can understand fundamentals. Make good use of your my Forex Forex Factory and ChatGPT, right? So that is the most important news we have there on Wednesday at first. Um, hmm, Guys, on Wednesday, on Wednesday, the man comes again. We have the U.S. interest rates, federal funds rate. Previous was at 3.7%. The expectation this time round is at 3.7%, and I personally I can still expect another rate pause, because if you listen to the Fed tone, they are a bit okay. So there's a probability that very soon we're gonna be having rate hikes. And I believe for those who are in the group, you have seen that our brother Sean shared something there concerning the possibility of a rate rate hike by December. We have something what we call the CMA Fed Watch Tool, CME. Is it CME? CME, something like that, where the Fed these those things where the Fed check is on now. Okay, on this I'll take you through this some other time, but the rates have dropped, so most of the odds are now on there might be a possible rate hike, but this time, that is now on Wednesday, I can expect a rate pause. So if the rate pause is to happen, it's in the favor of the dollar index. So what will possibly happen is that the dollar index gonna be bullish. The dollar index gonna be bullish, gold will be bearish, and the rest, the likes of GBP USD, Euro USD, gonna be bearish. So you see now, what we have here that is now fundamentally is supporting what we had on the other hand sentimentally. Let's see if what we're gonna have on technicals will still align, right? Let's see what we're gonna have on technicals if we'll still support those bears, and if everything goes in hand, it's gonna be good. It's gonna be good. So that was Wednesday. Let's check on Thursday. That's Wednesday. Let's see Thursday. Let's see Thursday. Um, on Thursday, the most important news we have is monetary policies on the UK. That will be at 2 p.m. At 2 p.m. At 2 p.m. At 2 p.m. we are going to have interest rates on the pound. Also, there might be a pause. There is high probability of a rate pause. There is high probability of a rate pause as well in the UK. Most of the times, actually, what one bank does, the rest normally follow. So that is just an hint. That is an hint. So later in the at 3:30 in US, we are going to have advanced GDP. That is quarter to quarter. GDP is the gross domestic product, and you can see previous was at 2.1%, which was an increase, and also they are expecting it to go up. The forecast is at 2.3. So if the actual comes out greater than forecast or than previous, that's gonna be a good news for the dollar, and we'll be bullish, right? Then we are going to have something we call core PCE, consumer price. Sorry, core PCE stands for personal consumption expenditure. Personal consumption expenditure. This is now people talking about or giving their views on how they feel on things concerning now prices for goods and services. Okay, let's check on it so that maybe you can understand something. Let's uh, let's visit our boy here. Let's visit our boy here so that you can understand something there. So you can see that is in our chat GPT. This is what it's telling us. Um, so core PCE. I've told you PCE stands for personal consumption expenditure. The actual figure has not yet been released. Scenario 1, actual less than 0.1. 0.1 is the forecast. Is a bullish dollar index. Bullish dollar index. So actual less than. What if actual is equals to forecast? It's gonna be neutral. That's where you normally get the market will buy and sell. But now actual less than. Sorry, the first one was actual greater than. Actual greater than. So if it comes at something like 0.2, 0.15, as long as it's above 0.1, that's a good news for the dollar. Now, if it's less than, it's gonna be bearish. So that's how simple you just interpret this data. Why core PCE matters? Core PCE is the Federal Reserve preferred inflation measure because it excludes the more volatile food and energy components. I've been telling you, when it comes to things to do with inflation, the core, the word core, that is where real inflation is, and that is what the Fed focuses on. Okay, now let's check on Friday. On Friday, we are going to have interest rates on Japan. We're going to have interest rates on Japan. Then later at 3:30 p.m. we will have GDP in Canada. We're going to have GDP in Canada, and that is how the economic calendar looks like for this week. That is from 26th to 31st. Let me try and check something concerning last week. Last week on Friday. Last week on Euro monetary policy. So you can see this can be an hint. Last week on Euro, you can see the interest rates remained at 2.4%. And I had earlier said I am expecting a rate pause on US and also on UK as well. So let's wait and see how things are gonna be. Alright, now let's go to what? Let's go to technical analysis. Let's dive into technical analysis and see what we expect from now this other side. Um, Last week was a good week. But personally, it was not that great. Uh, I did some mistakes which costed me a lot. I lost several accounts, including a funded account of 700, 500, and some other personal accounts of 1,000 plus. Yeah, but anyway, it's a new week. We are going to try again. So remember I told you this, if the dollar index is bullish, USDXX, this is now the pairs which starts with the US dollar, or the US dollar is the base, they go the same direction as the US dollar. So analyzing the US dollar is very, very important. Analyzing the US dollar is very key. And this was our analysis on Monday. Remember on Sunday we did not have this session. I did it on Monday. This is the analysis we had. We expected this, the market dropped, and then. So let's do a fresh analysis. Let's do a fresh analysis and see what we can expect this coming week. Let's do fresh analysis and see what we can expect this coming week. So when you go to weekly time frame, you will see market came and respected this FVG or fair value gap. This is a fair value gap. So for those who don't understand what a fair value gap is, you get that we have three consecutive candlesticks. We have three consecutive candlesticks in this case. We have three consecutive candlesticks, and one, when you check on one, you can see it's one, it's what? It's longer than the others. And of course, you'll get these candlesticks will have some wicks. Even if it's not a big wick, but you'll get that the candlesticks got wicks. So the one I'm demonstrating here is a case of a bullish one, like the one we have on our chart. So what you normally do, you come and mark this law, the law of the previous candlestick. So this is the previous candlestick before the long candlestick, which is at the center. So I'll mark the law of that candlestick. So this is now where the fair value gap is. This is the 100% of the fair value gap. And then I'll mark the I mark the eye of the previous candlestick and the low of the immediate candlestick or the candlestick after. So the distance in between here now is the fair value gap, is the FVG. This is now what we call the fair value gap or FVG, fair value gap or an imbalance. The distance in between there. That means when this long candlestick was being formed, maybe there was news or there was a lot of pressure in the market and there were orders in here, the likes of maybe buy stops or others who had placed most of the times, because the market is coming from down, these buy stops mostly they were not activated. So what will happen after the market goes, let's say maybe market makes another candlestick and continues up, it will come back to the fair value gap. And coming back to the fair value gap, it can either come to the 50% of it, which is the center, or to where it started, and that is what I call the 100% of it, and then the orders will be activated. And maybe if you had not gotten the entry there, you can get your entry on the fair value gap. So what I normally do, I have this tool I call a gang box. Wherever we have a fair value gap, I normally place it, and I measure where I have my 50%, and then once I'm done, I delete it. So you get that I have two lines where I can expect the market to come to, and then I can get my entry. So I can have the first entry here and have the second entry, right? I believe if you have been following up with my charts, you have seen these things. If you have been following up with my charts, you have seen these things. So now, guys, when you check on this is what? This is euro. This is the dollar index. Man, this is the dollar index. The dollar index or the DXY. When we check on the dollar index, you will see that it respected that fair value gap. The market respected this fair value gap here, and then what happened? After market tapped the 100% of the fair value gap, it did what? It started going up, or it started buying. And let me show you something concerning the fair value gaps. So I'll use my gang box. Hope you guys can see my screen. I had some little interruption there. Somebody confirm you can see my screen, man. Somebody confirm you can see my screen. Hello. Let me do what? me do something. Let me check on my network, then we can continue. Let me check. Just a minute. Just a minute. Okay. Everything is okay. So let me get back to the meeting. Let me get back to the meeting so that we can continue. Let me get back to the meeting so that we can continue. Yeah, all is well, all is well. So okay, it's loading for the meeting. Yes. Okay, let me reshare my screen, guys. I had some little bit of an error there with my network, but I'm back. Uh-huh. So let's continue. So I was saying, I wanted to show you something about these fair value gaps. So I've shown you how you identify a fair value gap, right? Let me do the demonstration. Sorry, the practical part. I have done the demonstration part. Let me do the practical part. So in this case, we have these long candlestick here, right? So we have that candlestick before it. I'm going to mark the eye of this candlestick before it, and then we have this candlestick right after it. I'm going to mark its low. So that's what I'm going to do right away. I'll mark that low, and I'll mark this eye. Now we are assuming this move has not happened. We only have the three candlesticks. The candlestick before, the long candlestick, and the candlestick after. So we assume the other move has not happened, right? So now I'll come and have my gang box. I'll come and place my gang box. So where we have the center of this gang box is the 50% of the fair value gap there. So once I've done that, I'll delete the gang box, and also the first line I'll delete it. So I'll be left with what, 50% and 100%. That is now, and you can see when the market started coming down for the orders, what happened? It first respected the 50% and it went up a very long way. So if this, maybe this was, let's say this was on gold, this could be a lot of pips. Then after that, the market came back now for the 100%, and after tapping the 100%, you can see the market is going up, right? I was just trying to show you something there, so I believe you have learned something and you have understood it. So now let's check on what happened. That is last week. Last week. So when you check on the last week's candlestick, you can see that was the low, and this is the high of last week, right? So if you check well, you can see the market took out the high of the previous week. The market took out the high of the previous week, and we have a lot of liquidity. We have a lot of buy side liquidity. We have that buy side liquidity there. You can use that one, or you can as well use this one, which is near. You can use this one, buy side liquidity, or BSL. BSL standing for buy side liquidity. So in most cases, when you have liquidity near and you get an entry, you can target the liquidity. You can target the liquidity. So like in this case, we have first this liquidity slightly above last week's high. So we will be targeting the market to go above this one this week, with FOMC coming, and as we have said, it will be in favor of the dollar. If things go well, we can expect the candlesticks to go above this, right? Remember, I told you in every time frame we look for two things. Number one is the market trend. Number two is the key levels. So like here in the weekly time frame, we are already done. You can see clearly that the market is very bullish. You can clearly see the market has been buying. Again, the key levels, you have already marked them, right? Now, let's see whether, okay, when the chart is in a line graph, is still okay. Now we can go to daily time frame. Now coming to daily time frame, in terms of what I've been teaching you, that how the market moves. The market moves in a strong phase, that is an impulsive move. Then it will do a correction. After the correction, market will do another impulsive move. Then it will correct again and make another impulsive move, and then correct. And currently you can see the market has been correcting, but what is happening, it's kind of that the market is now breaking out of the consolidation. If you are very keen, you can see that this is where the market has been consolidating. And let me draw it, and I believe when we go to the next time frame, that is either 4 hours or a daily time frame, it will be a trend there. It's gonna be a trend. But here on daily time frame, it's what? It's a correction, or a bullish a bullish flag, for those who understand those chart patterns. Now we have drawn that. We have a key level here. We have a key level, and you can see the market respected it. It came down to that level, so that one has already been respected. So what next? If that one has already been respected, is this one around here. Market might now decide, let me drop a little bit, and then I can continue going up. Remember, this is daily time frame, and when you change your chart back to candlesticks, you can see we have a fair value gap there, a very tiny one with an order block. So the market might decide to do what? The market might decide to come here. And actually, where we have fair value gaps, we normally have order blocks there. So fair value gaps and order blocks, to me, I see them as one and the same thing. So I don't struggle much in that. Now when you come to H4, and you will see that the market is like this, what I normally do, I now do what? I take this back, I reduce it, and then you can see on H4 the market has started to form a trend, an uptrend. The market is forming an uptrend on H4. So allow me to plot the uptrend which the market is forming on H4. That is the support trend line. And I can have the resistance trend line. Yeah, I can have the resistance trend line there. So wherever we were expecting the market to go, it's a good point, because if the market comes down here, it will have given us the third touch on this support trend line, and also it will have come to a very strong level. Actually, you can see the zone is very strong on 4 hour time frame. compared to daily. So let's redo it. Let's remark it. Let's remark it here on H4. You can see clearly that the zone is very strong. The zone is very strong on H4. The zone is very strong on the 4 time frame, right? So we can expect this market to drop, and then we can now go up. This is 4 time frame, and if you wanna do swing trading, be looking for your entries on H4. And actually, remember we are using small accounts, so it's better to do a swing trade. A swing trade will be okay. Personally, I'm looking forward to start doing swing trades actually, where you can order trade for like 2-3 days. If you get something like let's say you get $500 and they used a 0.1 lot. No, that's gonna be $500 rather than scalping every day and maybe then end up blowing. So I'm looking forward to do swing trades very soon. And I've said the best entries for swing trading, you can get them on H4. Yeah, so when you come to 1 hour, you will see that there is nothing important on H1. Nothing important on H1, sorry. So once you are done with your analysis, you can take your chart back to candlesticks and see whether there is anything making sense there. There's nothing. And on H1 at our zone, you can see we have a fair value gap somewhere with an order block. So we will be watching the market at around that level. Yeah, that's it on the dollar index. So what we do, we will wait for the market to open and see how it opens. There's nothing much. So we are done with gold. We are done with gold. Sorry, we are done with the dollar index. We are done with the dollar index. So let's have a look on gold. XAUUSD. Let's have a look on gold. Forex.com. Let's have a look on gold. So remember, we are starting from the weekly time frame. We are starting from the weekly time frame. And when you check on gold, this is weekly time frame. So you can see last week the market was very bullish, but market came to this. I can call it kind of an order block. For those who understands order block well, they will tell you which kind of an order block is it. But for me, I don't. But I know it's an order block. Market tapped there, and you can see it. It started doing what? Doing a reversal. So let's mark the high and the low last week. And we can conclude that you have seen that recently gold has been very bearish. You have seen that because you can see the recent weeks how the market has been. Recent weeks you have seen market has been bearish. And you have seen also sentimentally gold is still what? Gold is bearish based on sentiments. Again, where the market reversed the previous time, yeah, this one. It's a very strong level, but there's a lot of what? There's a lot of sell side liquidity. So I'll mark that one. That's at around 38.90. There's a lot of what? Sell side liquidity over there. So with FOMC coming, FOMC is now the interest rates on the US. With that coming, I can expect the market to drop below that 900. Below that 900. If it drops below that 900, we have this 38.90 as a point of interest, and we have another fair value gap to watch. We have a fair value gap to watch at that 770. So those points we have to be watching on them. Now let's check on daily time frame. Let's check on daily time frame on gold. Let's see daily time frame on gold. And you can see on daily time frame, remember we have said the market moves in what? an impasse move, market moves in an impasse move, then a correction, an impasse move, correction, impasse, correction, impasse, correction, impasse. Currently, or what has been happening recently, like 2 3 weeks, market has been in a correction. So what we expect is now an impassive move, and that will probably happen during the FOMC. We have a lot of sell side liquidity here to be grabbed, so we expect the market now to break out of this consolidation. Remember, we have said we have the target of 3880 and 3770. Those points, we are gonna be watching them. So this is daily time frame. This is daily time frame on gold. This is daily time frame, and you can see we had this FVG, a very tiny one. Sorry, not tiny, but we had an FVG there. The market came to that point and it started going up. It is okay. So on daily time frame, I don't see much. Even when you turn your chart to this, when you turn your chart to a line graph, I don't see much there on daily time frame. So let's see H4. Let's see 4 hour time frame. Let's see H4. Now coming to 4 hour time frame, you can see initially that is last week, the market was trading in this downtrend channel. Market was trading in this downtrend channel, but this week the market broke out. Market broke out of that channel. Market broke out of the channel. It came to a key level, which was a very strong resistance. When you check horizontally, you will see that it was a strong resistance where the market went all the way up to. Market had faced several rejections over there. Then the market dropped. And again, you can see where the market reversed from again. It's another strong wash. It's another strong support zone where the market came to, and then it started going up. Is another strong zone. Another one is here. We have another strong level. This one. So what I'll be expecting now, based on my experience and what I can see in the market, is that the market probably drops to around this level here, then goes up here, and then from there we can look for long sales on gold. This is 4 time frame. That's my view on H4. Market probably going up to 4100, then from there we can look for long sales. Let me have the chart in candlesticks and see whether there's something there making sense. Actually, you can see there we have a fair value gap there and an order block slightly above it. So the point is very much okay. The point is very much okay. So let's go to 1 hour. Let's go to 1 hour and see what's there on H1. Let's see 1 hour. So when you check on 1 hour, you will see that the market is doing something again on H1 in terms of the trend. Market is building a new trend. The market is building a new trend, which is a downtrend as well. And what I'll do now, I'll have my trend line here so that I can work with the current market. We normally say that evolve with the market, and evolving with the market is where you have to include the current what? The current market. So that is how the trend looks like. It's a downtrend. That's how it looks. And whatever we have, for those who understand chart patterns, you can clearly see that the market is trying to communicate something. That is, we have a possible inverted head and shoulders pattern. Let me show you. The market dropped to this, so that's gonna be the left shoulder. Market came down here, market has gone up and market is trying to come back here to form the right shoulder, and then we can go up to this zone. And by coming here, market will have given us now an head and shoulders pattern, which will take us down. So that is what I'm expecting. And when you check here, you can see market formed a double bottom. Market formed a double bottom, and then it went up. So market open, we'll see how it opens. We'll see how the market opens. On the market open, we will see how it opens. But for me, I expect this market to drop to this and then go up to that level. Then you can look for what? You can look for those. You can look for sales. And again, market might be very volatile because of those weekend news where the US did what? Decided to stop attacking Iran. Market might open with a lot of bearish move, then drop to this level where it reversed from on, is it on Friday or Thursday, and then it can now come down. So we'll be watching those two levels. Let's see whether there's anything making sense there. And actually for this, we have this fair value gap somewhere here, so which is a fair value gap, another block. So we'll be watching the market there and see what happens next. That is it on gold. From me. I don't know if there's anyone with a different view on that. And something else to remind you, if you have a zone, it's not a must for the market to respect your zone. Sometimes make sure you watch the market volatility. Because now, let's say we have this zone, and the market comes here with a very strong candlestick, a candlestick with a lot of volume, then it breaks this zone. What does that mean? Our zone is becoming now what? Invalid. Our zone is becoming invalid. So what we'll do, we will now wait for the market to do a retest. If maybe you had taken your profits, you can wait for a retest and then you can look for another entry. Continue going with the market up and targeting what? The buy side liquidity up there. Right? So that is it on gold. I don't know if there's anyone with a different view. Okay, major. Okay, major. You know, we have different approaches. We have different styles. So yeah, your view is still okay. But for me, I have what I normally check on. I don't just rely on the fair value gaps and so on. So let's wait and see how the market will play out. Let's wait and see how it's gonna play out. So that is it on gold. I said I'll check on Bitcoin, but I'm not gonna do the analysis. You can see we had this. I shared this on Friday. This was on Friday. I shared this sell. I was expecting it to go further, but you can see currently what the market is doing. It's coming up a little bit, and but to me, this is a retracement. So I expect Bitcoin to give a sharp drop very soon. I expect Bitcoin to give a very sharp drop anytime. I expect Bitcoin to drop massively. For the buys yesterday with my guys, I had shared the buys with them and things went well. So that is it from me, guys. If you have nothing to say, we can call it a day, and we see how things get this coming week. See you next Sunday for the weekly market focus session again. For the daily updates, signals, and all that, I'll keep updating you. Yeah, have a great, beautiful week ahead.